Good morning. You listen to FloorDaily.net, and I'm Kemp Harr. This morning, my guest is Kermit Baker, a Harvard economist who looks both at the architectural billings business and also at the remodeling business with the Joint Centers of Housing Studies. Kermit, how you doing?
I'm doing fine, Kemp. Thank you very much.
It's been a few months since we talked, and the last time we talked, I was a little surprised because we're talking about the impending downturn in the future, and that caught me by surprise. Billings Index did just come out recently, and it's good news. The last 5 months, it's been over 50, and looks like this last reading for June was 54.2, which is very nice, but one little blemish there is the inquiries is coming down. So talk a little bit about that, if you would.
Yeah, and I'm less concerned about inquiries, Kemp. I do think you're exactly right in talking about billings, and we've had, as you said, 5 months in a row of positive numbers, and the June number was extremely strong. The May number was strong, so we seem to really be building some momentum in terms of design activity at architecture firms. Mm-hmm. Inquiries were down a little bit. That's kind of a softer measure. I like to focus a little bit more on new design contracts. This is new project activity coming into architecture firms, and those numbers have been extremely strong recently. So, hopefully the inquiries numbers that a little more forward-looking but a little softer will begin to turn around. And like I say, the hard numbers in terms of work coming in and then work going out the front door in terms of design activity being completed are both very, very positive. So, I think we're on a good roll now entering the second half of the year.
That's good. You can look even in more depth to this report. You look at it regionally, so everything is up above 50 and from a regional perspective, but the two strongest regions are the West and the South. And so they're kind of carrying the ball. Everything else is just barely over 50. And another thing that's interesting is you talk about firms that are hiring, and it's actually the bigger firms, the big architectural firms, that are doing a lot of hiring right now. Is that right?
Yeah, I think that's true, and I think that has something to do with the sectors they're working in. Kemp, a rule of thumb I use, it's obviously very crude, but I think it does have some validity, which is that smaller firms tend to focus their practice on residential projects, mid-sized firms on commercial industrial projects, and large firms on institutional projects, the big healthcare and educational activities. So I think the turn-up in terms of large firms activity is really in some sense reflecting the strength that we're seeing for larger institutional projects that are getting underway also.
And so let's look at that for a quick second. You're talking about the vertical sectors. Obviously, office, retail, hospitality. Hospitality, actually, from our read, is probably the strongest. And you mentioned last time we talked that institutional, which is healthcare and education, had been soft but was making a turn. So is that still your read?
Yeah, that's still my read. I mean, it's been a slow, painful upturn for the institutional sector for a variety of reasons. The two biggest pieces of within institutional are healthcare and education. They account for about two-thirds of spending in that institutional category. And healthcare, I think pretty clear what's going on there, just too much uncertainty in terms of what's going on in terms of that whole federal system to encourage, companies to invest in that sector. So I think we're going to have to see some stabilization there before that really turns up. Education, reasonably strong demographics, coupled with, state and local government finally getting back on track fiscally. House prices are up. That generates more property tax revenue. It allows local governments to float some school bonds to build new facilities. Interest rates still pretty favorable for floating those bonds. So I think that sector's coming together a little faster than the healthcare sector.
Okay, so before we leave this commercial topic, your outlook for the rest of the year, do you think we're going to continue to see scores above 50?
Yeah, I think we will, mainly because we still see growth in new work coming in. Separately, Kemp, I don't report this a lot, but we do every quarter track backlogs at architecture firms, how much work they have in-house. And, the first two quarters of this year, we've seen the strongest numbers we've seen in backlogs since the last recession. A lot of work in-house at architecture firms, the number is close to 6 months of current project activity if nothing new came in. Just a lot of work coming in and a lot of work still residing within those firms that I think really does point to a good solid second half of the year for design activity and therefore reasonably solid 2018 for construction activity.
All right, well, let's take your AIA hat off and put on your JCHS hat and talk about Joint Centers for Housing Study, where you at Harvard study remodeling. What's the latest information there?
Yeah, every quarter, Kemp, we do try to get a sense as to what the next 12 months are looking for home improvement activity. You know, these numbers, our indicator suggests that this sector of the economy is growing at about 6 or 7% per year. Those are good, solid numbers. You know, over the last several decades, we've seen growth in the 4 to 5% on average. So above trend. You know, I think folks are feeling more comfortable about investing in their homes. House prices are up, as I mentioned. You can still get good, solid interest rates if you want to take out a home equity line of credit to finance that project. So households continue to spend an awful lot of money on their homes.
Some of the things that you look at, I know, is this ownership level, and an ownership level is at a low point, isn't it?
You know, the home ownership rate, Kemp, is the lowest it's been in the last 50 years, and I think that's a concern, and a lot of that really has to do with the rate at which younger households are getting into the owner market. You know, whether millennial households are buying homes or not. And you know, for a lot of things, mostly to do with the economy, they have delayed the age that they're getting married. They're delayed the age that they're having children, and therefore delayed the age that they're buying their first home. That traditionally has been in the late 20s or early 30s, and we're now seeing that tick up to the mid-30s, even later 30s in some instances for younger households. So that is a concern. That's a concern for the housing market. It's a concern for the home improvement market. I think it's fundamentally a concern for the economy if we're getting this late start in terms of making life progress, finding the right job, saving for the retirement, a lot of other things. So hopefully the economy is going to accommodate, and these millennial households will catch up with prior generations, but it's been a tough slog so far.
I noticed one comment you made on the recent study here was that aging in place retrofits is a big driver in this area.
It's a huge potential market. You know, certainly the fastest growing segment of our population is, baby boomers moving into their retirement years, and they often live in homes that really don't accommodate their needs as they move into their 70s or 80s or even into their 90s, in terms of, being able to get into their home and get around their home and other sorts of things. So, we have a huge job in front of us making homes that seniors live in accessible to their evolving needs. So I think that's going to be probably the biggest market for home improvement spending over the next decade or two.
Yeah. All right, one last question. As you look at this whole built environment that you study, what are some of the things that you really kind of worry about? What keeps you up at night around whether or not we're going to see growth over the long term?
That's a broad, complicated question. I mean, a lot of uncertainty now in terms of, all the major sectors. You talked about commercial. Is online shopping going to kill the retail market? Is Airbnb going to kill the hospitality market? Is telecommuting going to kill the office market? So some uncertainty there. I think in the short term, I'd put at the top of my list the labor problem. It's just very difficult for construction firms to find qualified construction labor, and I think all the uncertainty we have about immigration policy now is certainly hurting that. Almost 30% of the construction labor force historically has been immigrants, and if we just can't attract that immigrant pool into our economy to work these construction jobs, I think we're going to be caught short over the next couple of years.
Well, thanks for giving us a read on your look at the economy and how it affects the built environment. Again, been talking to Kermit Baker, a Harvard economist, and you've been listening to Kemp Harr and FloorDaily.net.